All righty. Well, hello everyone. Hello to you early birds who are who showed up to this event, this exciting online event, on time and even early. Hello to everyone. My name's Luke Robinson, and I am a business advisor here at Collective. And I'll be your host for today's webinar. And of course, it's a very exciting topic today. We're going to talk about Retro S Corp elections. Essentially, how to backdate an S Corp election. What does that entail? Is there still time to do it? And, et cetera, et cetera. But while we kind of wait for people to trickle in here, if you wouldn't mind, throw in the chat box where you're from. I kind of want to get a sense of where in the country I'm talking to. And then we'll just give a little Colorado. Okay. Tampa. Okay. Well, I'm actually in Sarasota, Florida. So I'm just a stone's throw away from you. And we'll just give a little bit of time for people to trickle in here before we get started. And also, too, some good housekeeping to do before we get started as well is if you have any webinar related questions or suggestions or feedback or anything like that, send us an email to webinars@collective.com. And we'd be happy to take a look at your suggestion and improve future webinars. Also, too, just it's important to note that this recording of this webinar will be sent out 24 hours after this session. So if you're registered, if you've given us your email, we'll email you a recording of this webinar. It's also important to note that there are two separate chat boxes in this discussion here. There's just the general chat box, the webinar chat, and then there's the Q&A box, because at the end, I will be answering questions. Any tax questions that you have, or questions about Collective, or anything that I can answer, put those in the Q&A box. So throughout this presentation, if any questions come to mind, just go ahead and throw them in that box, and it'll be organized and on one spot so I can answer everyone's insightful questions. But I think we've got enough people to go ahead and get started. Yeah, and thanks for everyone for telling me where you're from. I always like to get a sense of who I'm talking to. And let's talk S Corp. Let's talk Collective. Let's talk tax savings and ways you can optimize your business. Here's our agenda. One, we're going to talk about how an S Corp can lower your taxes, lower your estimated taxes, of course. Two, who can late elect for an S Corp election? Because right now, technically, we're past the deadline for a timely S Corp election for 2025. This year, that was March 17th. So it was a couple days ago. And so technically, any S Corp elections made right now are late. So we'll talk about how that works and, is that even possible? How and when to retroactivate an S Corp. Not only are we going to talk about just electing the S Corp election and, if it's possible to be done late now, but also we're going to talk about backdating the S Corp election for the entirety of this year. So is it possible to backdate to January 1st? Is that too late? In what scenarios can you do that? And then how a late S Corp election can lower the estimated taxes that you've already paid to the government. So, let's say that you've, already made a, first quarter payment, or you've already paid some taxes in the government that you think you're going to owe. A retro S Corp election might lower those taxes that you've already paid. So you might get a refund. So we'll talk about that. And then, of course, like I mentioned, I'll answer some questions at the end. It'll be open forum and anyone can ask a question. Okay. This is also very important to note. Consider this webinar as just education. Consider it as information. Don't consider it legal advice or tax advice. It's always a good idea, to consult with a legal professional or, or a tax professional, before you act on any of this information. All right. Well, let's talk about how an S Corp can lower your taxes. That's the whole point, right? Like, why would we even be talking about these tax strategies if it wasn't for lowering taxes? So let's get into that. First, let's talk about the taxes you even pay. What kind of taxes are involved, when you own a business? And for one, you have income taxes, of course. And this is what most people think of, when they think of taxes. These are this is the main example. And income taxes are based on marginal tax brackets. So essentially what that means is different chunks of your income will be charged different tax rates. So let's say that, in total, you make $100,000, something like that. From the first dollar to $15,000, that might be charged 10%. And from $15,000 to $25,000, that might be charged 17%, and so on and so forth. And then you add them all, those brackets together, and you get your total tax bill. That's how marginal tax brackets work. Then you've got the self-employment tax. And this is a completely separate tax rate. This is in addition to the income tax. And it's a flat tax rate of 15.3%. But literally what it is, and I'm getting ready to blow your mind, so hold on here. It's Medicare and Social Security taxes. That's what the self-employment tax is. That 15.3%, it's what funds our Social Security and Medicare programs. And it's a flat tax rate. It's not marginal based on brackets like the income tax is. And how it works is different based upon how you're paid or how you're classified. This Social Security and Medicare tax, this self-employment tax, this 15.3%, you even pay that when you're an employee. It's the same tax rate when you're a W-2 employee. It's still 15.3%. But the difference is, by being self-employed, by law, your employer has to pay half of this tax rate for you. It's just a requirement, by law. So, but if you're self-employed, you pay both halves. So, and that ain't fun, believe me. So that's why it can be so expensive to be self-employed, of course. It's because you have a higher tax burden, technically, than a W-2 employee. Oh, and here we go. It just kind of echoed what I said. This is why taxes are so high when you run a business. It's because of the self-employment tax. There is no employer to pay half of this for you. There's no one mandated by law to pay half of these taxes. So you're on the hook for the entire thing. And it's unfortunate because, when you run a business, you're already wearing so many hats. You're already taking a risk, more so than employees are. And you got to pay extra taxes, unfortunately. Let's talk about business structures and how each business structure, how the finances work. How are people taxed between LLCs and all this kind of stuff. And for one, we'll start off with LLCs, which is the same thing as sole proprietorship, not having an LLC. You're taxed the same way, regardless if you have an LLC or not. So how this works is, for one, of course, you have your total revenue, and that's gross revenue. That's your total income that your business makes. That's every dollar that your business makes. And then you have your tax deductions. And tax deductions, that's just another word for business expenses. That's just things that you can write off for your business. And then you get your net income. And your net income is what you're actually taxed on. You're not taxed on your gross income. You're allowed to write off expenses first, and then you're only taxed on the rest. So you get your net income, and that number is either a positive number or it's a negative number. If it's positive, you have a profit, of course. You have money left over after you've, operated the business. If it's negative, you've got a loss, which means that the expenses, your business operations were more expensive than the money you've made. So that's a loss. Either that profit or loss is reported on your personal tax return, on your Schedule C of your personal return. And then those profits are subject to both the self-employment tax, like the 15.3%, and the income tax, the marginal tax brackets. So when you're just an LLC structure or sole proprietorship structure, the tax burden is quite substantial and quite heavy. Let's talk about who can late elect for an S Corp. And first, before we get into that, let's talk about legal structures. Legal structures are things like LLCs, corporations. They're things that you set up with your Secretary of State's office. Wherever you live, you go to the Secretary of State's office, and most days, or today, it's online, of course. And for an LLC, you file articles of organization, and you filed an LLC, for that state. And that is a legal structure. That is a business structure. And of course, it requires, a formal organization process. You've got to file paperwork. Usually you have to file an annual report to keep this limited liability company in existence. That's what a business structure is, or a legal structure. An S Corp is something completely different. It has nothing to do with a corporation or an LLC or a legal structure. An S Corp is not necessarily a corporation. An S Corp is a tax selection. It's a way to ask the government to tax your business in a certain way. If you don't ask the government to tax your business in a certain way, it's taxed a certain way by default. So like we mentioned earlier with the LLC, that's taxed like that regardless. Once you start up an LLC, it's taxed like that automatically, where you pay both the self-employment tax and the income tax on a big chunk of your profits, both of those tax rates. What you can do, though, with an S Corp is you can ask the government to tax me as an S Corp, tax me under the S Corp tax rules. And that saves you money in certain scenarios. How it works when you're an S Corp is S Corp owners, they don't pay that self-employment tax, like the 15.3%. They don't pay it on business profits. There's a chunk of your money that's no longer subject to that 15.3%. And how that works is when you make an S Corp election, which is just filing paperwork with the IRS. That's essentially what it is, having your LLC taxed as an S Corp. What you're doing is you're creating an employee-employer relationship between you and your own business. You become an employee of your own LLC when you go this route. And since you're an employee, your business will pay you a salary. It'll pay you a W-2 wage, just like you'd make, if you work for someone else as a W-2 employee. But the cool thing about S Corps is the only sort of chunk of your earnings that's subject to the self-employment tax is your salary amount, the W-2 salary that you pay yourself. The rest, the business profits, whatever's left over, are no longer subject to those taxes anymore. So let's go through an example. Here, let's compare two examples, two tax examples between if you're a sole proprietorship or a single member LLC, which again are the same. You're taxed the same way if you're a sole prop or an LLC. And let's compare it to when you're an S Corp. And let's assume that in both of these situations, let's assume the business makes the exact same amount of money. You're making in this scenario, this person's making $160,000, whether they're an LLC or whether they're an S Corp. Over here on the LLC side, you've got that 160 grand, but you can't pay yourself wages. Wages for an owner of an LLC aren't a thing. You can't pay yourself. Doesn't make any sense to pay yourself as a W-2 employee when you simply have an LLC. There's no benefits, not possible. So then the distribution is the full 160K. It's an owner's draw that the full 160K is essentially just an owner's draw. That owner's draw is fully subject to the 15.3% self-employment tax. The whole shebang. So the total tax for that is $24,480 for just an LLC. An S Corp works completely different. As we mentioned before, now that you're an employee of your own business with an S Corp, you pay yourself a salary. So you're making the same amount of money at 160 grand, but in this scenario, this person is paying themselves a $60,000 salary. They've determined that this is a reasonable salary for them in this situation. So now the $60,000 is paid out to them in salary, but they can give themselves a $100,000 distribution, an owner's distribution of the business profits. It's what this $100,000 is. So you still have access to all of your money. You can still pay it to yourself and, anytime that you want to. But now with an S Corp, only your wage, only that $60,000 is subject to the 15.3%. So your tax drops from 24 to 9,000. It's insane. And, once you reach a certain income level, an S Corp just makes sense. It just kind of becomes the next step. So, overall, you're saving 15 grand in a scenario like this. So let's talk a little bit more about the salary. Because an interesting question I get, they'll say, okay, well, if I'm only subject to the self-employment tax on my salary, then why not just pay myself $1? Why not pull a Warren Buffett, and just make $1 billion and just pay myself $1 and call it good? And my response, because you might get audited if you do that, unfortunately. What the IRS says about the salary is that it has to be reasonable. It has to be a reasonable salary. So it can't be so low that it doesn't make any sense. So, let's say that you start a software consulting company and you are making, your business in total is making, $500,000 a year. Let's say that you're making $500,000. It wouldn't make much sense in an S Corp to pay yourself a $10,000 salary. Software engineers are making a lot more money than that out in the market. So, you might have to pay yourself a $100,000 salary or whatnot. But the thing is, if the salary is too low, the IRS could audit you and penalize you and, kind of reclassify some of your salary into distributions. And, it's just not a fun time. So it's important to pick a reasonable salary when you're doing this. And sometimes that can be hard to do by yourself. And what we can do is, if you come on board with Collective, we'll give you a salary recommendation. We'll tell you, we'll suggest what we think you should pay yourself, to keep the government happy. So we'll take care of that. And it's important to note that, of course, your salary is a tax strategy, which means you don't want to pay it yourself so low to where it makes the government mad, but you also don't want to pay yourself so high to where it eats up all your savings in the self-employment tax. So it's a balance. Which one is best for you? Because, another interesting question I'll ask, or I'll get asked is, well, it sounds like S Corps are always better, you're telling me, based on the information you're telling me. It sounds like you always save money with an S Corp. And that's not necessarily the case. Whether or not you go the LLC or S Corp route largely has to do with the income level of your business. So let's say that you're an LLC. We give a suggestion of $60,000 in profit. If you earn less than $60,000 in profit, it's probably best to stay in LLC. Not always. We still have some people join that make a little bit below the 60 grand or, who are pretty close to it. But that's a general number to where we say that's the most optimal point of income to where it's worth it. Also, people that, want a simple, very straightforward tax structure, they don't want to mess with any of this stuff. That's another, prime example of someone that would need to stay as an LLC. An S Corp, though, is better for people that earn more than $60,000 a year in 1099 profit or self-employed profit. And also people that want to maximize their retirement savings. When you're self-employed, there's a little bit more, there's more things you can do with retirement and more money that you can save for it. And then also for an S Corp, it's also a good idea to have enough cash flow to make regular payroll runs, to make it happen. Okay, let's talk about how and when to do this. How can I backdate this S Corp election and how can I make this happen? Here's some key deadlines that are coming up or have already passed, mind you. And for one, there was a March 17 deadline to make an S Corp election for this year, actually. Technically, it was a couple days ago. And it was the deadline to timely elect the S Corp tax status. So now, technically, what we'll have to do is make a late reasonable cause election for that. But also, too, if you're already an S Corp or a business entity like that, that was also the deadline to extend to file or extend, pass-through tax returns for that. April 15th. That's a deadline everyone knows that's coming up. That's a deadline, of course, to file or extend your personal tax return. But that's also the same deadline to make your first quarter estimated payment. So that's not fun. And then if you're running payroll, April 30th, you've got payroll returns, so on and so forth. So it can be a good idea to have the company help you navigate all this stuff. Okay, let's talk about the deadline for March 17th and kind of what that even means. A timely S Corp election essentially means that the government sets out rules that if you want this S Corp election to be considered timely and to have less scrutiny on it, you need to file it by March 17th. Usually it's March 15th, but this year, March 15th was on a weekend, so they pushed it to March 17th. You've got to an LLC or a business entity must file the S Corp form, which is Form 2553, by March 15th. And it's got to be filed within 2.5 months at the beginning of the year to avoid the IRS late relief process. So, it's still possible now to make an S Corp election, but we're going to have to do a late relief process, which we can do, no problem. Those are common and we can make it happen. But there is that timely S Corp election. Okay. How late or how a late election can lower taxes you've already paid? Potentially. Maybe back up. Sorry about that. What happens is, let's say that you have already made a quarterly payment. Let's say that you've already paid taxes or whatnot. You've kind of estimated your taxes for this year, and you're like, okay, I'm going to go ahead and pay money to the government. If we backdate your S Corp election to January 1st, that means that we're retroactively lowering your tax bill. So, whatever estimations that you've made and whatnot will lower, and you'll get that money back in a refund at the end of the year. So it's okay, if you've already paid some taxes based on your current estimations, we can still get that money back for you. Okay, now we talk about an S Corp and all the amazing tax savings that it provides, but unfortunately, there's also some annoying stuff about it. There is more admin. There's more stuff that you got to juggle when you have an S Corp. It's a lot harder to run an S Corp administratively speaking than it is an LLC. So for one, you have ongoing state compliance. You've got to deal with your LLC and make sure that stays up and running. You have to have payroll software, to run your paycheck. You've got to deal with an accountable plan to reimburse yourself for your home office deduction and whatnot. You got to calculate your reasonable compensation. There's all these things you have to do that they themselves, each one of them, are kind of hard to figure out even where to go to figure it out. So it's not fun. What happens with us, though, is we provide all of those services in one spot, in one platform. So you don't have to have a payroll processor over here, a bookkeeping software over here, a CPA or a bookkeeper. All of your professionals and softwares and the running of your finances is in one platform, is in one company. And of course, we'll set up your S Corp. First thing we do, we'll provide monthly bookkeeping. We'll take care of the ongoing payroll. We'll file your S Corp taxes. We pretty much do the whole shebang when it comes to running an S Corp. We handle your back office so you can focus on growing the business. We handle the paperwork so you can focus on your passion. And like I said, the first thing we'll do is set up the S Corp, which means if you don't already have an LLC, we'll go ahead and we'll form that with the state, get your EIN number for you, and write your operating agreement for the LLC. Then we'll make the S Corp election, and that kind of what forms and finalizes your S Corp. Then we will take care of your monthly bookkeeping. We'll automatically hook up your accounts and categorize your transactions each month, reconcile them, and we'll issue accounting reports each month. So we'll give you a profit and loss statement, a cash flow statement, and a balance sheet every month. And what's nice about this is that it's all in one platform, with sophisticated technology that keeps everything organized. You can see, all of your finances, you can see all of your business documents, and you can message your account manager that you also get with Collective. You get a team of professionals that are, handling your bookkeeping, handling your payroll, things in the back end. You can message them and, get support anytime that you need it. We work with solopreneurs making at least $60,000 in profit. And the reason that we say that $60,000 is because that's the point of income where you're saving enough money with the S Corp to make the cost of Collective worth it, to make the cost of running payroll and all this extra stuff that you got to do with the S Corp worth it, financially speaking. So, $60,000 is that sweet spot. Now, don't get me wrong. There's still people that join Collective that are making $45,000 or $50,000. So this is not a hard and fast rule, but it's just kind of suggestion of an income level to have before you join Collective. And then over here, we work with, for one, sole proprietorships. People don't have LLCs or business structure set up yet. We work with single member LLCs or PLLCs, which are called professional limited liability companies. But we work with single member LLCs that have already been formed, meaning there's only one person in the ownership structure on the LLC. Then we also welcome LLCs or PLLCs already filing as an S Corp. We can go ahead and onboard you in that situation too. Long story short, it's one login to run your business. Whereas previously, before us, your logins were all over the place. To run an S Corp, you had to log into a payroll account, immediately. You've got to log into a bookkeeping account. You've got to email a CPA, in your Gmail account and, expose your information to PII and all that kind of stuff. With Collective, it's one login, one secure login, and one organized financial platform that handles the whole shebang for the business, from the bookkeeping down to the payroll, down to financial support throughout the year, and tax filings at the end of the year. So, when you're a busy business owner and you're burning the midnight oil and, working every spare moment, like I know you all do, Collective is a great partner to keep things organized on the back end. One, let me back up. Like I said, we'll handle bookkeeping and accounting. So we'll reconcile each month, send you the reports, categorize your reports, do all of that. Of course, we form your LLC. We'll set up the LLC, make the S Corp election, get your EIN number, and write your operating agreement for you. Payroll, we'll handle your payroll process. And one really sort of plus about our payroll service is we'll give you guidance on how much to pay yourself, because that's really important when it comes to an S Corp. It's kind of a mystery sometimes how you can even pay yourself. And then, of course, we'll handle your taxes as well at the end of the year. For one, the S Corp return is included in a membership. That's just part of the Collective experience. We'll take care of that for you. If you'd like us to handle your individual return, that can happen right in your Collective dashboard. That's an extra fee, and that's powered by our partner tax file. So it makes it really convenient to handle your return right in your Collective dashboard. Then, of course, we'll take care of compliance and support. So with your LLC, we'll remind you to keep that up and running each year, when it's due, and how to do it. And then, of course, you get a support team of professionals, from bookkeepers to tax professionals that you can message anytime and get support from. You've got two options when you're paying for Collective services. If you go the monthly option, we're $349 per month. At will contract. If you pay in full for the annual option, for 12 months at a time, you save 15%. So that drops the price down to around $35.60 a year. Then you also have a one-time setup fee of $199, and that includes, of course, getting things set up, cleaning up some bookkeeping, and all of that. That's all inclusive. It includes the bookkeeping and payroll tools, the whole shebang. And also too, collective is tax deductible. Collective is a business expense. It's something that you can write off. Simple, transparent pricing. It's a fixed cost. It's flat fee. There's no hidden fees or anything like that. And you can either pay it, month to month, or you spread it out over 12 months, or you pay it at one time. Okay. Well, we would encourage you to schedule a call with one of our advisors. If you think that an S Corp might be in your best interest, if you're interested in having all the administration and everything handled for it, talk to one of our business advisors. We'll go through your situation, ask you some questions to see if an S Corp is even the route you need to go at this point. And before we sign anyone up for a collective, we make sure that it's financially beneficial for our potential member. So we'd encourage you to schedule a call. And then, of course, we've got an exciting discount offer to where if you come with a webinar code, you get your first month half off. So you save $175. And please, we'd love to talk to you. It's 30% less than doing it on your own, which sounds kind of crazy, but it's true. And if you go through here, business formation, like setting up an S Corp, is usually around $400. Entity maintenance is $250. You have to pay for bookkeeping software, payroll software, and all of that. And the total cost of having to pay for each of these softwares at once is more than what collective costs for the year. And the reason that's even possible is because we've consolidated all of these services into one platform, and it makes it more efficient. They're more integrated. They're more integrated together more easily. Things run more efficient. So we're able to charge a lower price for a better experience than a DIY approach. Okay, well, we have reached the coveted Q&A section. So please, there is a Q&A box here. And if you have any questions, I would love to answer them. And I think we already have a list of some questions. And at what net income level do you recommend converting to an S Corp? $60,000 net income. And again, when I say net income, I mean, after you've written off your business expenses, kind of after you've done that. But $60,000, that's what we recommend. And the reason that we recommend that is, when you look back on the slide previously, and I think I can probably go back here, is if you pay monthly, collective comes out to around $4,100 a year, as you can see. If you pay in full for the 12 months, then that drops it down to around $3,500 a year, somewhere around there. At $60,000 net income level, people are generally saving around $6,000 in the self-employment tax with an S Corp. Very generally, that's not an exact number, but generally that's what they're saving. So if you're saving $60,000 with an S Corp, it becomes a no-brainer to pay collective, around $3,500 to administer it and make sure everything's taken care of, because you're still saving money. And as you make, more money above that 60 grand, your cost with collective stays the same, but you save more and more money with an S Corp. So, at $60,000, you might be, saving, $6,000 with an S Corp, but $150,000, you might be saving $15,000 with an S Corp. So it exponentially scales with how much money you can save compared with your collective cost staying the same. How can I get an accountable plan with an S Corp? Well, here's what an accountable plan is. When you have an S Corp, you can still take off, or you can still write off the home office deduction. Long story short, you can write off a portion of your mortgage interest, utility bills, HOA bills, so on and so forth. But how you do it works a little bit differently. Now, the S Corp has to actually reimburse you for a portion of those expenses, because those expenses aren't showing up in your S Corp bank account or your business bank account. They're showing up in your personal accounts. So since it's not a part of your S Corp operation, Your S Corp has to reimburse you, literally pay you for those expenses that you've already paid yourself personally or made yourself personally. And that is a write-off for the S Corp. So it's a way for you to still write off your home office deduction, and it's called an accountable plan. But if you come on board with us, we'll handle it for you. If creating an LLC now and then make an S Corp election, how is 2024 handled tax-wise? Well, it's handled the exact same way that you've always done it. The S Corp election will start on January 1st, 2025. So it's kind of separate situations, and it'll start, how you've always done it. If you see yourself having more than $60,000 in income, but also have a full-time W-2 income, does collective make sense? That is an excellent question. And the answer is it depends on how much money you're making in W-2 income. Because, and let me explain it this way. The self-employment tax, like the 15.3%, the tax rate that you're saving with an S Corp, like that's the relevant tax rate. That's Social Security and Medicare taxes. That's what that is. And when you look at that 15.3%, the Social Security portion is the largest portion of that tax rate. I think it's 12.4%. And the Medicare is 2.9, something like that. That's the Social Security portion is the largest chunk. Oh my goodness, I'm getting tongue-tied. But that portion, the 12.4% Social Security portion, actually caps out at around $168,000 in income. So let's say that you had a W-2 job and you made $170,000 in it. You're at the Social Security cap. So of that 15.3%, the 12.4% isn't charged anymore on any more of your income because you've reached that 168,000 mark in your W-2 job. So therefore, an S Corp is less worth it because you're not paying a majority of that self-employment tax anyway on your income. So instead of saving, 15.3% on your distributions, you're only saving like 3%. You're only saving the Medicare portion because the Medicare portion doesn't have any cap. But you're saving a lot less when you have a high-paying W-2 job with an S Corp than when you don't have a W-2 job and when most of your income comes from self-employment. So that's just really important to keep in mind. And, if you have a high-paying W-2 job, chances are that an S Corp is less worth it. Do you implement Section 105 medical expense plans? Quite frankly, I have no idea what that is. I don't have much experience in expense plans. So you don't work with multi-member LLCs. As of now, we do not work with partnerships. And that's what a multi-member LLC is. Like that's actually a partnership. The only exception to that is if you are a spousal multi-member LLC in a community property state. And there's like 12 of them. It's states like California. I can't remember them right now, but that's the only time that we'd be able to handle a partnership in that situation. Since we missed the March 17th deadline, how much time is there to do a late relief process? What's the latest you can do this in the year? Well, here's the thing. You technically can do a late S Corp election all the way up until December 31st of this year, but it's not a good idea. The best sort of suggestion is to make an S Corp election as close to the deadline as possible. So really the best advice is to do it as soon as possible. And even if you don't go with collective, it's important to make the S Corp election essentially right now. And the reason that is because the closer that you are to the beginning of the year, the less errors there are when making an S Corp election. When you backdate an S Corp election or make a late S Corp election, you've got to go back to January 1st and clean up the books, alter the payroll system because you haven't been paying yourself payroll because you haven't been an S Corp. You have to do a huge cleanup period, and that's more error prone. It's not as a good idea. It's a good idea to be an S Corp as early in the year as possible. So that's what I'd say. Can we get the presentation to reference after this call? Absolutely, Martin. So this a recording will be sent to you in an email within 24 hours after the end of this session. I already have an LLC starting May 3rd, 2024. Got electing S Corp. I got a letter from the IRS stating that it was filed late and that would start January 2025. That's totally fine. We can still help you out. That's totally fine. We would just get that started and pick up the cleanup from there. I didn't make money, but lost money in a scam. I heard you can deduct bad debt with an S Corp, but can't with an LLC. I'm not so sure about that. That's more of a question for a tax attorney. So there's no way to retro-elect S Corp for 2024. I mean, if you have an LLC in existence in 2024, technically it is. Technically, you can still go back and do a retro late election for 2024. But it's really hard because you've already missed the deadline for the 2024 S Corp tax return. So that's, a kind of complication in itself. And you would just have to have a really good argument as to why it was that late. And usually it's just not worth the time and the effort. What if we already applied for an S Corp last week ourselves? Can Collective still work with us? Absolutely. That's not a problem at all. And what we'll do too is we'll kind of verify, the S Corp election that was made and just make sure everything is in tip-top shape. I created the LLC in August of 2024. I'm eligible for an S Corp election and want to elect to be taxed as an S Corp from August 2024. Yeah, unfortunately, Collective would only be able to do it from for January 1st, 2025. For going back, anything like that, you'd need a lawyer and pay a lot of money too, unfortunately. I have a new startup business and will be investing profits into multifamily real estate. How do you suggest setting up my business entities? Ooh, that's a good question. Well, I guess there's some general suggestions when you're dealing with LLC and when you're thinking about LLCs and rental properties or investment properties. And what I would say is when you're acquiring these properties or buying properties, it's a good idea to group deals or group properties that have a lot of equity in them in their own LLCs and separate them from other properties. So for example, let's say that you own 5 properties and one property you have a big loan on and you don't have any equity in it, but another property you have like $400,000 of equity in it. If you put those 2 properties under the same LLC, and let's say that someone slips and falls in your property with no equity, they can sue you and come after the income from the other property because they're in the same LLC. So they can come after your equity in the other property, even though it has nothing to do with those 2 properties, simply because they're in the same LLC. How you mitigate that risk is you separate them out into separate LLCs. So you protect properties with high equity in them in their own LLCs to shield them from lawsuits. So that's something that's good to keep in mind when you're investing in real estate. We currently use QuickBooks for our bookkeeping. We invested a lot of time and money to get our office manager to use the software effectively. Does the data transfer easily? Is it a big learning curve? The data transfers easily and it's not a big learning curve. You won't need an office manager to do the books anymore because Collective will be doing it. But still, you'll still have full visibility into your stuff just like you would with QuickBooks. So you can log into your Collective dashboard, run your own reports, see what's going on. So absolutely, it's a pretty seamless transition. Is the election valid for 2024 or 2025? With us, it would start in January 1st, 2025. A few years ago, I had a CPA firm set up a parent LLC. that owns other working LLCs that operates the business and makes profits. Some health issues kept me from launching the business. I'm nearing a launch now. Should I reactivate my LLCs or set up new LLCs? That's probably more of a question for a tax attorney, or a business attorney. That's getting a little bit more high stakes. We are a construction company with employees. Does it make sense to be an S Corp? It completely depends. Like, it completely depends on your income. It could be, if you're making solidly, over that $60,000, but it depends on your income. I opened my business in January 2024, but didn't file any payroll. What should I do? Well, if you're just an LLC, you don't have any 941s, that is. Well, I mean, if you didn't pay yourself any payroll, then you don't need to file any 941s. I mean, you didn't pay yourself in payroll, you don't have payroll reports due. So, I mean, it's a good idea to pay yourself payroll because eventually the IRS might audit you, wondering why you're not paying yourself a W-2 salary. But if you've already gone through a year where you didn't pay yourself any in payroll, then you shouldn't owe any 941s. Okay, so I created an LLC in August of 2024 and want to elect to be taxed as an S Corp from August 2024. I filed an extension last week. The tax return we file by the end of the month, including the Form 2553 late election. Is this election valid for 2024 or 2025? If I start the election in 2025, should I file the same form? Yeah, no, this is a question for a tax attorney. Like, this is, you need to talk to a professional about this. I haven't filed Form 940 or 941 for 2024. We just started the business in November 2024, but it was registered 2024 January. We are expected over $100,000 in revenue. What should I do? Again, that's a complicated situation. I would talk to a tax attorney. I have been retired a few years, and my Social Security has not been high enough to require me to file taxes. I am now planning to launch a new business online. As an LLC or an S Corp, am I subject to estimated taxes? Do I have to set a salary for myself for the first year when I don't have a firm idea of how much I will earn? Well, for one, as an LLC or an S Corp, you are still subject to estimated taxes. If you're making money, you owe taxes, and the government wants you to pay taxes throughout the year. Now, in terms of setting up a salary for the first year, it completely depends on how much you make. You only have to pay yourself money when the business actually makes money. So if the business is at a loss this first year, you technically don't have to pay yourself salary throughout the year. So, keep that in mind too. And if that's the case, if you don't expect to make a lot of money this first year, then you shouldn't become an S Corp, because there's no reason to do it if you're not paying any tax anyway, any self-employment tax anyway. I was paying myself as an employee, but not considered an S Corp in 2024. Yeah, I mean, what you've done is you just filed a W-2 for yourself, maybe, but I mean, I would have to know more about the situation. Again, I would talk to a tax attorney, because it just kind of depends on what you've done, like what you filed with the states and whatnot, and like whether or not 941s are required. Did I understand correctly that S Corp elections are best suited for businesses that are operated by one owner or operator? Um, Not necessarily. That's just companies we work with, because when you get more owners, they can be a little bit more complex, S Corps. But you can still make an S Corp election if there's multiple owners. Sure. I'm the sole owner of my company and have a team of 5. The business is right at that $60,000 profit mark. Well, I mean, it just kind of depends. If right now you're the sole owner, you've got a team of 5 and you're right at that $60,000 profit, then if you expect some high growth this year, then it probably is worth it to become an S Corp. If not, you might want to wait. So it just kind of depends on, how much you think you'll make. I'll receive only commissions in quarter 4. Should I pay quarterly estimates, quarter 1, quarter 2, and quarter 3? Yes. Oh, interesting. I see what you're saying. Yes, you should actually. So if you think that you'll make, a big chunk of money in quarter 4, you should estimate that and go ahead and pay quarterly, which I know it sounds kind of crazy, but that's what the IRS wants you to do. Is there a separate bank account that your folks use to pay taxes and such? No, you can have your own bank accounts, and whatnot. So no. And do I create that for you locally? You can have an account, essentially anywhere you want, and we can hook that up for you. Okay, we are expecting a growth of 1.8 million revenue and 100K in profit. Well, first of all, congrats. Good work right there. I mean, technically that is above the revenue limit that we would recommend for an S Corp. Now, you're in a construction company and you have a lot of employees. I would schedule a call with Collective, and we can talk through it, with your business advisor and kind of see how it would work. So sure, I would schedule a call and see what we can do. All right, let me make sure that there's not. Okay. I think we have answered all the questions. No problem, Amelia. It was a pleasure. But yes, that's it. We've answered the questions. And that is the end of this S Corp Retro S webinar. And I really hope that it's been informative. I enjoy this so much because all day I spend my day, talking to self-employed entrepreneurs. And I find them really inspiring. And I find it really impressive. Like when someone has the guts to quit their job, like, go on a frontier and like do things themselves. I really admire that spirit. So, optimizing taxes, saving business owners money is something that I'm serious about. So please, if you found usefulness in this, like if you think the Collective would be a good fit for your business or an S Corp is, a place that you need to go, schedule a call with us. Go to collective.com, schedule a call with a business advisor, go through some S Corp scenarios, and we'll have a conversation. If not, this makes sense for you. But that's all the time that I have today, and everyone, best of luck with your businesses.